Lyft
Yeah,
earnings just
everything's
happened.
wonderful.
Everything is just sunshines and rainbow right now. Look,
Mm-hmm.
Lyft has one superior feature right now
Yeah,
over Uber. One
yeah,
superior feature, and that is stay within area. That's it.
yep, yep.
You know, the thing is, I thought with upfront pay that you could accept a ride and you would be a-okay to take that ride because that's the ride you accepted. Nope,
Yep.
nope, nope. That's not the
Yep.
case. We'll still reroute you to some other person that you didn't want to take the ride for, and then you have to cancel the ride. I mean, it's not going to count against you, but still, it's not going to be what you want to do. So yeah, that to me, right there, I just don't like. I do like the stay within area feature, and you know, if they actually had some bonuses in my area, which they don't compared to Uber, another thing they lose out on. So you know how I think it was maybe the first or second week I made that analogy where Lyft is the little tree that never got sunshine.
Yeah.
Well, Lyft is getting uprooted too because they're not getting enough water. That's all I'm going to say right now.
Yep.
All
No,
right,
I mean
so
they're not. I mean, bottom line, stocks down 23%. Today on again, they're down to 10 and change in a new all-time
Tony,
low. Look, they made it. I listened to the conference call yesterday. Listened to John Zimmer. Listened to Logan Green. They listen to the CFO, and they're all making it sound like, yeah, we're on our way to profitability. I'm just going to point to a couple of little things because I don't think we need to harp on this too much. Okay, so middle screenshot, third paragraph. The ride-sharing company ended the quarter with 20.31 million riders, short of analysts' prediction of 21.3, and still below the 23 million it had the quarter before the pandemic struck. Guess where Uber is at with those numbers, Chris? They have surpassed those numbers. They have way surpassed the pre-pandemic numbers, and they look again. I'm not an Uber fanboy, so don't send me shit, please. But financially, analysis-wise, Uber is a better situation if you had to buy one of these two stocks. I'm not telling you to buy or not to buy. So
mhm.
people are not gravitating towards Lyft for some reason or another. I mean, they missed that by a million, and they're still short of 3 million before the pandemic levels when Uber's business is fully back on. Except that on the third screenshot to the right, look what it says there. It says Lyft earned $51.88 in revenue per active rider. Guess what that is, Chris? Rip the passenger off, beating analyst forecast
Mhm.
49.30 and above the 45.63 per active rider in the same quarter last year. So they were able to stiff the riders another $6 and change without passing it on to the driver, to you people. So,
Oh, of
so
course.
what, this game is
Well,
going to end. You know what this
maybe
game is
they've
like?
gone even more.
Yeah.
I mean,
Look, this
again,
game is going
like,
to end. Look, this
but
game
you
is going
you
to end.
missed the sentence before that. It said Lyft made more revenue per rider after a year-long driver shortage pushed ride prices to record highs.
Mm-hmm.
Drivers have been coming back for many
Yep.
different reasons, and yet there's
Macroeconomically.
still so that just
Yep.
goes to show you that they're still underpricing rider or rides on the driver's side when it comes to this upfront
Absolutely.
pay, and
Absolutely.
they're charging passengers whatever they want, and people are doing it.
This game is going to end, though. Okay. The revenue growth is coming in both cases, by the way, Uber and Lyft. So whoever is an Uber fanboy now is going to hear it because I listened to their conference call a week ago. The only reason the revenue is growing is because they're able to charge more and pay less. At some point, that's going to end, people. Okay. So be
Mhm.
realistic about Uber as well. So, they're both not growth companies. They're in shit businesses, unfortunately, except that this new algo that they're running, the double algo they're running, is brilliant on their part. And they're squeezing every dollar they can get out of the passenger, and they're squeezing every dollar they can get out of the driver. So, you know, I mean, look, man, with the macroeconomic conditions, I don't blame anybody getting out there hustling and trying to make a couple $100 extra a week. Okay, but
Yep.
without me being a willing participant, they're actually helping these companies. To be honest with you, because next week I'm doing a study now on oversaturation and how many goddamn drivers there are when I drive. I have never seen anything like this in my life. Every corner has 8 drivers, 6 or 8, whatever they show on their app, 8 Lyft, 8 Uber drivers, including me. 16 drivers at every corner of LA, bro. So people
Oh,
are
I believe
desperate.
it.
People are desperate.
Oh
People
yeah.
have to go out there and drive. You know, what are you going to do?
Yeah, desperate times.
Norma, here's my Norma. Norma comments a lot, and I want to hit that comment. As long as it's cheaper, it's not cheaper than a cab, Norma. Check your cab rates in your city. It's definitely not cheaper than a cab anymore. Definitely not in LA anyway. So yeah, it's not the cheapest alternative any longer. Because,
it depends.
Yeah. So, but yeah. So Lyft
is not doing well. We had Uber's earnings last week.
Stock went up 10%, and Lyft earnings came out. Stock went down 20%.
Yeah. So now here's the thing. Where do you? I mean, both earnings reports came out significantly different across the board. One shows something positive. The other one shows something negative. Lyft has also came out and said that they're laying off 13% of their staff. So that's a significant thing right there. I mean, several layoffs are happening across the board, but they are. And, the thing is, where do you see Lyft? What do you see for Lyft going into the future?
Lyft, as of yesterday, had 1.8 billion in cash, and they started drawing on their 400 million credit line, or they established one. That's finance jargon, meaning that if they're desperate, they can draw on that. They're burning cash still. Company's worth about $5.5 billion as of today's closing price, which is a bargain. I think somebody will come and swoop it probably at 15. $7 billion for all the data that they have. Probably Waymo, Google, I think is going to be the suitor. DoorDash doesn't have the money to do it, and I don't think they will. But at some point, I think they'll be taken out, and Uber will be a monopoly at that point, to be honest with you. And I think then the drivers may benefit, because then Uber can charge whatever the F they want to the passenger, and then maybe they'll throw some bones to the driver. Well,
let's be real. They won't do that.
But I mean, at some point, right? Lyft has to end its suffering. I mean, I don't. I like certain things that they have done. Instant pay was their invention. Actually, they've done decent things, but they've always been the second place. And they actually contributed to the drivers suffering, because when there's two competitors, there is a race to zero, right? Uber would cut rates, Lyft would cut rates, Uber would cut rates. The drivers suffered a lot because there was that competition race to zero between these two companies. And at some point, it's going to end. And if Lyft has a couple of more quarters like this, and at $10, stock is cheap because they have $2 billion in cash. So out of the 10, like 3 is in cash already. So you're paying $7 for enterprise value and all the data they collected the last 10 years. I mean, if I had the money, I would buy Lyft and fire half of those. I'm not going to say.
Well, I look at it a little different. I think having the competition is good. Having two major platforms, it'd be better if there were at least 3 on a national scale, or at least more options that drivers have the ability to. That's something that's going to be sustainable. And of course, like I say, something that's scaled, not something that is in 1 or 2 markets. Like, that isn't going to affect the majority of drivers. But with that being said, I think, they're going to, you have the option where you can multi-app. You have the options where you can go on one platform or the other. If something happens to one for the time being, you can go on the other. Like if you got suspended or something for some BS report or whatever it might be, you could go and drive on the other. But the problem is, if you only have one app, because let's say Lyft decides to close doors, well, then, I don't see that as being a net positive for drivers. I see that as being a net negative, because you don't have that second company there. I mean, who knows? All right. Thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.